Okay. The Federal Reserve in the past few days has announced a rate cut and why you should not be too happy when Fed cut rates. What are the implications moving forward and how will the market react to this news? So on September 18, the Federal Reserve has announced a 50 basis point cut, and that signals to the market that the inflation was moderating and as well the labor market was weakening. So this was the first rate cut in the past 4 years, and that was during the early days of COVID pandemic. So why do they actually do a rate cut? So according to the committee, they are actually confident that the inflation is moving towards 2%, and they are charging the risk of balancing the employment and inflation. So as you can see, Jerome Powell actually said that they are trying to achieve a situation where they can restore price stability without the increase in unemployment that comes along with this inflation for quite some time. So as you can see from the Federal Fund Target Rate chart, for the past 20 years, whenever there is a rate cut, a recession will be followed subsequently. So during the 2002 dot-com bubble and followed by the Great Financial Crisis in 2008, so in 2008, we actually enjoy a low interest rate environment until 2016, where there's an increase in interest rate. Then in 2020 came COVID, and now the Fed fund rate actually is hovering around 4.75 to 5%. So right now there's a 50 basis point of cut. We should send the Fed fund rate to around 4.75 to 4.5%. And for the past few days, the market actually react quite negatively after the news of this rate cut, and it seems quite sudden. So right now the main concern for the Federal Reserve would be the unemployment rate, as the unemployment rate is hovering around 4+%, and that coupled with the high inflation rate right now, many people in US are actually losing their jobs, and that explains on the economy right now. And to the Federal Reserve is that rate cuts will actually fix this problem. So the question is, why do Jerome Powell actually announce a 50 basis point cut, and what is the likelihood of another 50 basis point cut? And it seems that Powell is actually trying to rush the rate cut wise in order to stabilize the unemployment rate, which they are actually concerned on the labor market wise. So this came as sort of a negative news to the market, as during the news conference in July meeting, Powell actually remarked that a 50 basis point cut was not something they are actually thinking about. However, in September, they actually announced a 50 basis point cut, and it seems like Jerome Powell is actually flipping Plata in a way. So this diagram basically summarizes everything that what the Federal Reserve is trying to do. So when inflation is low, they are trying to raise the rate, and when inflation is high, they are trying to lower the rates in order to avoid a recession because of the higher cost that impacts business. And when the company doesn't have business wise, then they will start to retrench people, and that will lead into a recession. And one comment actually summarized the base of this problem is due to the printing of money. And so with the Federal Reserve cutting rates, what does it mean for Singapore? As you know, Singapore interest rates are largely influenced by global rates and tend to broadly follow the direction of other central banks, especially so with the Federal Reserve. And with the US cutting rates, Singapore will also likely enter a lower interest rate environment. And you can see that banks will start to cut their interest on savings account as well as the mortgage rates. And now how does Singapore actually achieve price stability? So we know that Singapore is mainly an import country, as we do not have natural resources. The only resources we have is human resources. And due to our high import rate, the exchange rate has a much stronger influence on inflation, and therefore the MAS monetary policy is centered on managing the Singapore dollar against a trade-weighted basket of currencies. Therefore, this is actually known as the Singapore dollar nominal exchange rate. So how Singapore manage this new is through the forex exchange market. So this basically evolved in the sales of purchase of US dollar against the Sing dollar. So this is the most preferred way, why as the pairing of US dollar with the Sing dollar is the most liquid currency traded. So with the rate cut, your returns on your T-bill will start to decrease, as T-bills are considered bonds, and the bond price actually works inversely against the interest rate. So when interest rate is high, then the price of a bond will fall, and when the interest rate starts to decrease, the price of a bond will actually shoot up, and your returns on your savings account will also decrease, as banks will start to revise their rates, and as well as the mortgage loans will also start to revise. So for mortgage loans wise, homeowners who actually borrow from the bank will start to see their monthly mortgage loans start to decrease as well. And for those who are investing conservatively, they actually will have to start to look at other form of investment in order to seek higher returns. Wise, otherwise their money may not be enough for them. So with the recent news of Federal Reserve actually lowering their interest rate, we saw that the REIT index has shoot up 15% from its lowest point. So however, after the announcement of 50 basis point cut, we can see the REITs actually crash a few percent. So what are your thoughts on REITs during this lowering of interest rate environment? Is it a profit taking section, or people is starting to feel that things may go south? And if you find this information helpful to you, do like and subscribe to my channel. Adios.